what can an SBA loan be used for? So I get this question a lot. First, it's really important to understand a couple things. Let's just break this down and talk about what an SBA loan is, and then we can get into what it's used for. So an SBA loan is a loan from the Small Business Association, and basically our federal government is backing that, and there's certain guidelines and standards that apply to all businesses if you're looking to get an SBA loan, right? So let's just go into what they can be used for, and then let's talk about what they can't be used for. Why you might get declined because of the use of funds, right? Usually you'll get declined because of credit. You might get declined because of the business just doesn't qualify. And sometimes, like I said, you get declined for use of funds. So let's go over what an SBA loan can be used for. It can be used for expansion, it can be used for renovation, it could be used to purchase a building, it could be used to purchase vacant land, it could be used to start up a business. Those are usually the most stringent. If you're using an SBA loan to start up a business, it's going to go off your personal credit, your personal collateral. They want to make sure that you can float the monthly debt service as a person, and then they want to analyze your business plan. So a lot of times it's used for like a franchise because a franchise has like set numbers they can hit. They have a pro forma, they have projections, and a franchise, they're basically giving you business in a box or a business model to run with. So with a franchise, all you really have to do is run the play, and that's why those are, there's specific franchises that are approved with the SBA that you can just go and apply and say, hey, I'm gonna do, this type of franchise, and then they're just underwriting it based on, your personal income, your personal financial statement, things of that nature. But I apologize, I digress. SBA loans can also be used for equipment, for furnishings, for working capital, inventory. It could be even used as a seasonal line of credit. And again, it could be used to refinance debt. Why would you want to refinance debt into an SBA loan? Well, a couple reasons. One, if you have a very high interest rate on some of the debt, or by consolidating that debt, it lowers your monthly payment, it makes sense to do because most SBA loans are going to go out 10 years. Whereas credit cards, you're paying them monthly, and with certain loans might be 1 to 5 years. So if you can consolidate all the business debt under one payment and get a lower rate and a lower payment, it makes a lot of sense to do that. Because at the end of the day, if you're saving money on the payment, that means you're going to be increasing your cash flow, and that makes it easier to grow and scale your business. And on the flip side, if you're paying a lot of high interest debt, whether it's a cash advance, whether it's a term loan, or it's credit card debt for the business, and you can consolidate with an SBA loan, let's say prime plus 2%, well, you might be paying an effective rate of 5% or 6% over 10 years, where a credit card could be 9%, and if you're only paying the minimum payment, what'll happen is that will compound over time, right? So that's why a lot of people use an SBA loan, and they use it to consolidate that, like I said. Let's go into some of the reasons why, some of the things that you can't do with an SBA loan. One, it will not allow for business expenses from any type of business that is involved with speculation. So basically lending, like if you are a bank, you can't get an SBA loan. It's very hard for somebody to underwrite knowing that you're gonna be taking that money and lending it out, because they don't know who you're lending it to. It's very risky. Same thing with any type of investment company, right? If you're investing in certain things, you're not going to get approved for an SBA loan. I mean, like if you're borrowing money to invest in, let's say, the stock market, and that brings us to our next one, real estate. You can buy real estate, and I want to be very clear on this with SBA loans. You can't buy real estate to rent it out. You can buy real estate if your business is going to operate out of that real estate. And I believe you have to own, or you have to occupy 51% of a building or land in order to qualify to purchase it with an SBA loan. Typically, the SBA loan that you'd be using is called the Commercial Real Estate SBA Loan, or CRE. Right? You also can't get approved if you're a gambling company for an SBA loan or a nonprofit. Right? It just can't cover those expenses. But I want to make clear distinctions and go back to the land use or the buying a building. It is very, very common for an SBA loan to be used to purchase a building or purchase land. You just can't use it and then rent out the majority of the building or the majority of the land to a different business. So your business has to occupy at least 51%. And another trick when you're working with and using an SBA loan is, let's just say your current lease, you're leasing a space for $10,000 a month currently. And if you buy that space with the SBA loan and your monthly payment drops to, instead of leasing it for $10,000 a month, you're actually going to pay the SBA loan $7,000 a month because it's spread out over more time. That's a very easy approval. The reason being, they know you can handle the debt service of your $10,000 a month lease. So you paying a $7,000 a month SBA loan in lieu of the $10,000 a month lease, they know you can do it. It's an easy win, and that's really what they're looking for, right? So I hope this helped you understand what you can use an SBA loan for and what you shouldn't use an SBA loan for. And if you have questions, please reach us at Integrated Business Financing. I'll be happy to run through any questions that you have.